Hello, and welcome to this episode of the Insights Interview, where we explore the evolving landscape of finance and technology. I'm Jack Robertson, data journalist at the Payments Association, and today we're examining the Financial Conduct Authority's CASS 15 safeguarding regime, which recently came into force. The 7th of May deadline marked a significant change to payments regulation. For the first time, payment and e-money firms need to reconcile safeguarded funds daily and maintain a resolution pack ready to be received within 48 hours. In this conversation, we'll unpack why the deadline matters, where readiness translates into genuine competitive advantage, and not just a sunk cost. Joining me is Nick Botha, Vice President of Payments and Retail Banking at AutoRek. Nick, thanks for joining me on the podcast.
Brilliant to be here again, Jack. Thanks for having me.
Great stuff. So if we're to sort of start by setting the scene, right? As I mentioned in the introduction, the 7th of May deadline's just passed now. But if you're in plain terms to sort of explain to listeners, what's actually changed for payment and e-money firms now?
So I think we saw this shift with investment firms, 10, 15 years ago or so when the FCA introduced the CASS 6 and 7 rules in that space. And the real shift, what we learned from that time and what we're seeing now is essentially the migration from guidance by the FCA and allowing firms to have their own interpretation of, what good looks like, what is best practice in terms of safeguarding client funds. And now that's completely shifted to the fact that it is now regulatory driven. There's no ambiguity about the rules or the guidance. It's very clearly stipulated in the handbook in terms of what firms need to be doing. You've just mentioned a couple of those things. And enforcement is sort of the repercussion of not doing this properly now. Whereas before it was, really just around ensuring that, you are interpreting the rules effectively. What we've also seen now as a consequence of the rules coming out is the FRC's rules have now also come into force around, what audit firms are actually able to do safeguarding audits. And I think what we're going to start to see naturally happen is that, these audits are going to become very lengthy. They're going to be very explicit, and they are going to be expensive for firms. There's no getting around it anymore. And I think that's the biggest shift that we're seeing is that firms are taking this a lot more seriously, as they should be. I mean, they probably should have been doing this the whole time, and most firms are. But just re-looking at your architecture, re-looking at how you're doing these things, and also re-looking at the culture of the way your firm understands what it means to safeguard client funds. So all these things have sort of shifted up until the 7th of May. And now that we're, about a month post the 7th of May, we're definitely seeing firms take action. And that's something that we didn't necessarily see for the years sort of leading up to last month.
Absolutely. So PS 25/12 brings daily reconciliations, monthly safeguarding returns, mandatory annual audits, and obviously that 48-hour resolution pack into force. So why was the 7th of May deadline such a significant moment for the industry rather than, just another compliance milestone?
Yeah, I think that's a really good point. I think, it's not just about safeguarding funds. You rightly pointed out there. It's about, I think the guidance is always to do reconciliations, not enforced to do daily. In fact, most firms probably weren't doing reconciliations effectively, particularly the internal reconciliation and calculation of the resource and requirement of funds currently held versus funds that should be held. But it extends further than that. It's not just about reconciling data. It's also about the resolution packs that you mentioned. It's also about the safeguarding return. And all of this leads to what will ultimately form part of what the annual safeguarding audit will look like. Audits are not going to be just looking at potential breaks in the reconciliations and break management activity, but they're going to be looking at scrutinizing the people, the processes, the technology, the full end-to-end process of how funds move within a firm, ultimately leading to effective safeguarding compliance. So, this is not a small shift that we've seen. And having spoken to some auditors and in fact the FCA themselves, they've urged that a couple things. They've urged that everyone take this very seriously. What we've noticed is a few firms looking to see what happens within the first 12 to 18 months. Times gone by have told us that typically the industry waits for some type of enforcement to happen and see what actually the repercussions will be. Not that they aren't safeguarding client funds, but just whether or not they, have everything in place to, remain competitive and be, looking after client funds effectively. And I think that's the key message from the FCA. The FCA are just they're not looking to prohibit innovation. We know that the space is all about innovation. In fact, just came off the back of Money 2020, and the key themes from the week was really around new payment rails, new product lines, AI, all really exciting stuff. And the FCA is not looking to prohibit any of that innovation and not to prohibit anyone joining the market. But I think they have a responsibility to look after people's and businesses' funds as organizations and people are using these payments firms as we shift away from the traditional banking environment. And they want to maintain that, but they want to do it in a safe and secure way. So back to basics for everyone and take it seriously is the message.
So listeners may have heard a previous podcast that we recorded together, but AutoRek's own research suggested that only a minority of firms actually felt prepared for the deadline. This was obviously in advance of the 7th. So why is now the point where firms should really, start to move in enforcing some of these pieces of infrastructure rather than just waiting and see to how enforcement progresses?
In our last podcast, we sort of said the time was then, and that was a good few months before the deadline. And here we are a month later, and we're still having the same conversation with a lot of firms. And the reaction, I think, is that most firms are looking to take action, particularly new entrants to the market. Not legacy payments organizations that have been around necessarily for many years. They want to get it right from the beginning. That's a really good move. The reason I say that is because it's a competitive advantage, not just in the industry, but also with the regulators. And what we're also going to be seeing is many other jurisdictions. In fact, it's happening already. Many other jurisdictions around the globe looking to the success or failure of what the FCA is doing in the safeguarding rules with CASS 15. We're seeing that in the European Union with the similar rules to be coming out next year. We're seeing that in Canada, Singapore, all around the globe. In fact, even in the United States, we're speaking to a lot of firms who are looking to adopt the best practice for safeguarding client funds. I'm not sure if that's a regulatory driven thing or if it's just wanting to remain competitive. And I think that's a key message, even in jurisdictions where these regulations aren't necessarily binding by law. But firms are looking at this as saying, well, there's no harm in safeguarding, over safeguarding client funds. So the time was before the 7th of May. In fact, I argue that most firms should be doing these processes, and they should have been doing this the entire time. But the fact that this is now in place, there is no time too soon to have a look at what do your processes look like, what are the flow of funds, how can you always keep up to date with what's available in the market to ensure that you are safeguarding client funds to the maximum that you can. That's technology, that's people, that's processes, that's education, and it all ties into the culture of the firm. So I think as soon as you can start to embed this culture of safeguarding across each of the parts of your organization, that's when you're going to start to see true success in sort of that end-to-end process of safeguarding client funds. And, as we move into, the next cycle of audits, etc., in 12 to 18 months' time, there will be some shifts, there will be some tweaks, there'll be some changes. It's also about setting yourself to be adaptable to those changes. I don't think it's necessarily a fixed thing that will be exactly the way it is for the next 5 years, because that's what we've seen in the past with other CASS legislation. So there will be those changes, but if you have that culture of understanding what it ultimately means, and you have the right systems and people and processes in place, and continuously training your teams and new entrants into your employment markets, that will start to resonate in the delivery of safeguarding. I think that's extremely important. So the sooner you can, ensure that all of those elements are in place, you're ultimately going to benefit from that long term, not just by ticking the regulators box, but actually remaining very competitive in a very competitive market.
Yeah, absolutely. So you already touched on how regulatory readiness can actually contribute to being a competitive differentiator. So obviously we're past the deadline now, but if you could expand a little bit more, how could early action actually become a competitive advantage rather than just another cost on the bottom line?
There's a few elements to this. I think there's the reduction in costs. Right, the sooner you get it right, and the sooner that your teams and people understand the processes and systems in place, and what you're looking to achieve. Once you take care of what your own house, people are going to start trusting your firm a lot more than what they might some other firms that don't have their house in order. So that is already a competitive advantage. Obviously you don't want to be the first. That's what they always say. You don't want to be the first that the FCA comes knocking on, or starts to enforce some type of regulatory fines or anything along those lines, because that's huge reputational damage. And if that's we've seen firms go under because of reputational damage. So you don't want to do that. You don't want to take that risk. So it's a reduction in risk, and it's a reduction in potential costs, in terms of the cost reduction element. But again, I think this is all about building trust in our industry, right? We're still competing with sort of legacy financial services businesses. We have new entrants into the market all the time. Again, just over the past couple of weeks, I've spoken to many new PIs that are looking to get their EMI license with the FCA, and not even just in the FCA, but also looking to get their money services licenses in Canada, or in the European Union, in Singapore, etc. And they are looking to set themselves up correctly from the start. So if you don't do that, you're falling behind. So getting that in the doors nice and early gives you a huge competitive advantage to those that are not doing that and relying on the things that they've been doing for many, many years. We saw this. It's almost like history is repeating itself. What we saw with the investment firms many years ago. It's literally just followed the same trend, and that trend is a big hype up until the deadline, a bit of a cooling off period, which is maybe what we're starting to see now a little bit, to see what's happening, what changes are going to be made, and then when it starts ramping up again after the first year's audits. We saw a tremendous amount of firms then coming to firms like ours to ask for support, and I don't think you want to wait until that point. Go and speak to those organizations that have gone through this regime. Go speak to firms and people. I would always say it's always good to make sure that you've got the right people that have been through this journey, to support the best practice to safeguarding our clients' funds.
Yeah, absolutely. So I guess sort of finally to wrap this up, right, you've just laid out some of the competitive advantages that organizations can get. I guess the bottom line is, how can AutoRek really help firms unlock some of these?
I just mentioned there to lean on organizations and people that have gone through this process, and this is what AutoRek does. I mean, this is like our competitive advantage, is that we've helped so many firms over the years with CASS compliance, right? And I would say that the biggest thing for us is that it's not just looking at certain parts of the process. We take care of the entire process, right? It starts with the data. Being able in the payments industry, we have extremely fragmented data, all over the place. It's very difficult to achieve compliance in terms of what the FCA is looking for if your data is not in a good place. And we're completely data agnostic. We can work across any payment rails, ingest data in any format. And for a lot of these businesses that work in the PSP, environments, all the data is fragmented. It's different. There's different formats, and it becomes very difficult to use. So we support clients on that front. Then it's about the internal and external reconciliation. Now, what we've learned in the space is that the external reconciliation activity is generally, or I would say widely done across the industry, but it's the internal reconciliation that is a huge pain. And we've managed to really help clients get over that hurdle of doing the internal reconciliation effectively. We then also take it that one step further, where we're also helping all the sign-off processing. As you know, there's a requirement for safeguarding managers to sign off on their positions of their segregated accounts every single day. So the frequency of doing this is something that we can support clients with. And actually what we've done is notice that there's actually the ability to support some organizations in our space where we can actually support them on this process intraday, because the nature of the products that they offer to their clients is real time and it's happening all the time. So we actually are able to support that too. As you rightly pointed out, it doesn't stop at the reconciliations and signing those positions off. It goes one step further, and it's all about reporting. AutoRek is actually a licensee of the FCA. We've got a really nifty piece of toolkit, which is called our regulatory toolkit, which means that we are able to ingest all the rules from the FCA handbook directly into your AutoRek solution. So it becomes that central repository for your entire resolution pack. Making sure that your systems and processes and what it means to actually resolve all these issues. We've got that all covered within the AutoRek solution. And you mentioned as well the safeguarding return. So that is absolutely something that we're helping clients with too. We have the templates that the FCA are looking to put out embedded within the software. So as I'm saying all of this stuff, the reason I'm highlighting all the constituent parts of our software is that it's one piece of software that takes care of that end-to-end piece. And I think whether or not firms are using AutoRek, but they're just looking at doing this, they should be looking at it the same. It's not just one thing that they need to do. It's an entire end-to-end process that they need to cover, and it starts with the data and ends with being able to articulate to the auditors and to the regulators exactly how things work within your business and who is taking care of what. And I think it would be remiss of me to also just mention, if I didn't mention, that we have in-house expertise that live and breathe this, right? So they've done this for CASS 675, and what we've done is we've got the right people in our business now to support clients. Although we don't advise on anything, we understand what best practice looks like. And most of the firms that come to us say, what have you seen in the past? What are other clients doing? And we just have so much experience and the right people with the right knowledge set to make sure that our software is delivering best in class software for CASS 15 and even more broad, right? So we are also helping clients in the EU, in Canada, again, like I've mentioned, all these places already, that are live using our solution for their safeguarding compliance. So it extends further than just the FCA. So if you're governed globally anywhere and you require safeguarding, which most firms should do anyway, we do have the best in class, fit for purpose solution that can help those organizations and the right people to demonstrate what best practice looks like.
Yeah, absolutely. A fascinating discussion, Nick, as always. Thank you very much for joining me.
Thank you, Jack.
What comes through clearly here is that the 7th of May was not the starting line nor the finish line. For payments and e-money firms still working through implementation, the practical next steps are clear. Review existing third-party arrangements and arrange conversations with your auditors within the year rather than just at year end. And to our listeners, thank you for joining us on this episode of the Insights Interview. If you'd like to learn more about AutoRek's safeguarding solution, do visit their website for further resources.